Good afternoon, attendees and our panelists. I can see people joining in. So we are going to get started in next minute or so while we are waiting for folks to log on. Let's get to know more about each other. Drop your business name and what you do in the chat box. I would love to see who all are there with us in the webinar today. And I'm sure our panelists would also love to see you all. Meanwhile, I just share my screen. Okay. Do let me know if you're able to see my screen clear. Okay, perfect. All right, let's get dive into this. Again, very warm welcome to all of you in on today's webinar, Meet the VC with Roger Chen Silverton Partners, presented by Early Growth. My name is Khushbu. I'm an email marketing manager with Early Growth, and I'll be a host for today. Just a few housekeeping notes for you all. This webinar will last approximately 40 to 60 minutes, including the time for Q&A in the end. You can place your questions in the Q&A panel at any time. This webinar will be recorded and sent to all of the registrants within 48 hours of this presentation. You can also find this recording and all of our previous webinar recordings on our YouTube channel. The link to it will be sent to you in the recording email itself. Something about us. Before we get started, let me tell you about Early Growth. At Early Growth, we have got the entire finance stack covered. What it means is really two things. First, you have got a strategic partner in growing your business. Our CFOs, with their years of experience in dozens of startups under their belts, help you see what's coming, good or bad, and take advantage of it. From strategic decisions to fundraising, they have seen it all before. Second, our CFOs, senior accountants, and tax advisors take care of all of the blockings and tacklings related to day-to-day, month-to-month, and year-to-year to your finances, so that you can focus on your business. Both Early Growth and our CFOs have been around the block a few times. We have helped and served over 5,000 clients coast to coast and around the world, approximately 40 countries. As always, our CFOs have helped our clients raise billions of dollars, and we would love to help you and serve you as well. What we believe in delivering peace of mind by providing you all one-on-one solutions for your needs and requirements, including CFO services, HR, accounting, taxes, and insurance. We'd like to protect your profitability by giving you sole point of contact to answer all kinds of questions and strategic dashboards to help you understand your business better. We want to be your partner in growth to help your business grow by we working in the back end so that you can focus on the growth side of your business. And we have a promo running. We can see that it's not too late or too early for us to start with the 2023 tax preparations, and you want to get a provider in place before the start of the year so that you can focus on the effective planning before the year starts. So we have a promo running to help you with that now. You can get $500 off on your 2023 tax preparation. And to make it more interesting, I would love to launch a quick poll of questions to our audiences. These questions will start in the next 10 seconds or so. You'll be able to see on your screens now. This poll will last until the end of the webinar, so you have ample amount of time based on your requirements. You can fill in the answers to the questions we have put in. Your team is critical to your success, and that's true whether you're building a startup or putting together a great webinar. We have got a number of partners in the startup community, but for today's event, it's the best of the best. Early Growth has always been focused on the team, the community. We know that together we can go further. To bring you today's webinar, we have a startup dream team. And to tell you more about our partners, we have our moderator, Chris Griffin, with us. Chris has joined us as a business development manager approximately 6 months ago. Prior joining to Early Growth, Chris was working as senior channel partner account manager at Community Brands for 14 good years, where he had collaborated and managed relationships with resellers to help market and achieve their sales targets. He had also worked in marketing relationship manager for 2 years, and with that, uh, he holds an experience as a promotion director at Infinity Broadcasting Corporation for approximately 3 years. Before we proceed, just a reminder, if you have any questions for our VC, please put them in Q&A window, not in the chat. So now, here to introduce our partners and to take over, Chris Griffin.
Thanks so much, Khushbu. Welcome, everybody. Glad you're able to make it on. It looks like we have a pretty good participation attendance list here. So positive to see that increasing each time we do these. Just so you're aware, this is something that we at Early Growth like to do monthly. So you'll see these possibly come back through really on a monthly basis around the country. Doing them here in Austin, Texas today, where I'm located, along with my partners that are on the line with us as well. Khushbu is not in Austin, Texas. She's from another land far, far away. So she's up quite early here on her end to make sure this runs smoothly. But really want to dive into our partners, give them an opportunity to give you an idea of what they do, how they can assist you, how they assist startups in general. Our ecosystem, our partner ecosystem is incredibly important to us. The people we have on today are great resources for you. So if you get a chance, once they've jumped on, once they've talked about themselves a little bit, talked about the companies, feel free to go ahead and reach out to them on LinkedIn. They can be, again, an incredible resource for you to lean on. It's not just about what they may be able to do for you specifically in their specific vertical or realm, but it's also in terms of just connections. There may be somebody that they can connect you with that may be a good fit to kind of help your business along there as a founder. So keep those things in mind. To start off, though, I'd love to bring on, let's start with John Clement at Insperity. John.
Hey, Chris. How you doing?
Good. Yeah.
So
doing well.
Okay. Well, I guess I'm supposed to say a little bit about us. We help startups, small and medium-sized businesses, with a suite of HR solutions, cost containment on medical benefits, compliance, risk mitigation, and platforms for HR administration and payroll. And that just is to allow for focus on running the business rather than focusing on the back office stuff in creating the business. So that's pretty much what we are as a fully realized HR partner for small businesses.
Great. Thanks, John. Much appreciated there. Next here we have Jerry Galvin with Kastner Gravel. How are you there, Jerry?
Yeah, doing great, Chris. Thanks for hosting and having us on. So Kastner Gravel is a law firm. We primarily represent companies and investors in variety of financings, whether that's a seed financing, Series A financing, up through growth equity financings. We also do a fair amount of mergers and acquisitions work, and then your kind of general kind of corporate needs in between, including commercial contracts, employment related matters, and things of that nature. So happy to be on, happy to be a part of the community. So thanks a lot.
Happy to have you, Jerry. Glad you were able to jump on here and be with us today. And then we have from Pacific Western Bank, we have Stephen. Stephen, I'm not even going to attempt to butcher your last name, so we'll go with Stephen as a first name.
No, hey, Chris. Thanks for having me, everybody. I'm Stephen DiPasquale. I'm with Pacific Western Bank's venture banking division. I've focused on this niche my entire career, which is hard to believe. It's over 20 years now, but we work exclusively with startups and high growth technology companies that go the route of raising venture capital. We also have a dedicated life sciences and fund finance team where we bank VCs and private equity groups directly as well. And so it's a venture banking niche. So a lot of times we're leading with venture debt to help companies as they're scaling in conjunction with equity and other banking services as well, treasury management and things of that nature. I'm based here in Austin. Our team supports the central region and the West as well. So thank you for having me.
No, much appreciated. And again, thanks for being able to join us here today as well for our November Meet the VC. And Khushbu, I'll kick it back over to you here.
Awesome. So yeah, for Chris, I would love you to introduce Roger here.
Absolutely, I can definitely do that there. On today's VC call, very happy to introduce Roger. Roger is a partner with Silverton Partners. Again, he is local here in Austin, Texas. And I think they're one of the major players in general in the entire state of Texas, if I recall correctly, Roger, but we can dive into more of that there. They're a leading venture capital firm that invests in the early stage software and consumer businesses with that high growth potential. He is also a board of director and or an investor in All Voices, Apprentice, Billy, Copper Cow, Coffee. That is a giant list that I will not finalize and run through there.
Yeah, no, don't feel any need to go through all that.
Appreciate it, Roger. But prior to joining Silverton in 2017, Roger was a principal at GenaCast Ventures in New York. While there, he was involved with investments in Big ID, DreNow, and Uptix. Before his investing career, Roger worked as an engineer turned PM at Google in Mountain View, where he led various initiatives within Google Maps and Chrome. He studied computer science and mathematics at the University of Michigan and holds an MBA from the Wharton School. Roger, how are you?
I am great, Chris. Thanks for having me.
No, definitely good. And now, are you at home today or are you in the Austin office?
I am at the Austin office.
Okay. Oh, do you ever work from home or you pretty much stick in the office and get away from the family?
We never really left the office, to be honest, and don't tell anyone.
Stay through.
We're
Got it.
gonna have a sphere of confidence here. But yeah, we work out of an old historic house downtown. It's got a lot of charm, and it's nice to get in here every day.
Perfect. Well, glad you could join us. I've been excited to have you on. I will owe you lunch after this, so thank you from the bottom of my heart for you to be able to jump on here with us today. But Roger, if you don't mind, kind of tell us about your path and what got you into venture in the first place.
Sure. Long story short, I kind of fell into it. I had quit Google around the spring of 2014 with the intention to enroll in business school in that fall. And so I was getting married that summer, moved back to Detroit where my wedding was going to be. And my fiance at the time was up there wrapping up her grad school. And I called up a buddy who was working at a VC firm in Detroit and said, "Hey, I quit early and now I'm bored. Can you hook me up with, an internship for this summer before my wedding?" And he worked it out with his team. One thing led to another. I spent the summer there, really enjoyed, the work, and went into business school with my sights set on getting into the venture capital industry. So it's kind of a boring story in some ways, but I've been doing venture now since 2014, and I love it. It's a great match for my interests.
No, great to hear. I love it. It just kind of fell into your lap. See, look at that. Positive attitudes can go a long way, apparently. So good to hear. Look at that. You were looking for an opportunity, and it just kind of happened there for you. Roger, what's exciting to you in the VC world?
What is exciting about the VC world? About this current time in particular, or just in general?
Let's make that a two-part question. Let's go with in general, and then as where things are right now, let's kind of separate those two out.
Sure. I think VC is a match for anyone who enjoys kind of going deep in topics and then immediately context switching and going deep in another topic, and it's kind of this endless cycle of learning, and so I think that's the thing that I enjoy most about it. In the role at Google, the expectation is that over time you get deeper and deeper into a certain subject matter. You became a greater expert, and that's kind of how you rise up the ranks in an organization like that. But I was just found myself bored, and around those years, just reading TechCrunch or talking to my friends starting companies, and just always curious about what other folks were working on. So turns out there's a job for that. What interests me, what's exciting these days, I think, is there's a lot of movement in the market, and I think there's a lot of dynamic change happening right now in our market, and so how we respond to that, how other folks are responding to that, it makes for a pretty exciting time for our business. So we'll leave it at that for now. I suspect we'll get more into that a little later.
I'm sure we will. I'm sure we will here. I tell you what, give us an overview of your investment thesis and fund formation, if you don't mind.
Sure. So Silverton is the longest running institutional VC firm in Texas. We've been around for close to 18 years now. We have just closed our 7th fund this past summer. Our focus since day one has largely been the same, which is to be the first institutional check, the first real investment partner for founders. And so to this day, we are a lead investor at the seed and Series A rounds of financing. We pretty much lead every deal we do, and we take a board seat with every deal we do. And we remain hands-on through the life of the business. And so that's something that a lot of early stage has moved away from, just with the growth of emerging managers or folks that have more of a large portfolio strategy. We've maintained a classical approach to venture, which is high conviction, high concentration bets, and just working very closely as a trusted partner with the founders.
Got it. No, that's great to hear. What's the typical investment size? And again, I know it's early stage, right? So a lot of the folks on the phone
Sure.
are, I would assume, probably not all of them, but typically we do see a lot of those very early stage founders that are on that are trying to get as much detailed information as they can. So yeah, if you don't mind giving me an idea, what is that typical investment size for you guys?
Yeah, I mean, I'd say we tend to be pretty flexible, and it really depends on the round that makes most sense for that company at that stage, in their life cycle. And so we've written checks as small as $250K, and as large as kind of 8 million in a first investment. A lot of it depends on if the company is, raising a pre-seed, seed, or A. But really, semantics aside, I think we tend to be fairly thoughtful about capitalization strategy for companies. And so I don't think there's a cookie cutter, raise amount for, because you're a year into the business, therefore, your next round should look like X. It really depends on what you're trying to achieve with fundraising and how you think about using, equity capital as a tool for accomplishing whatever it is, whatever the next milestones for the business may be.
Sure. No, that sounds great there. Are you a generalist fund, or are you focused on certain sectors? Because I thought you're a little more on the technology side, especially being here in Austin, Texas.
Yeah, I mean, every company is kind of a technology company these days. I would say about half of our investing is in like SaaS or just some version of software, B2B software. And then we tend to be fairly diversified these days. So, we're investing in digital health, fintech, marketplaces, tech-enabled services, prop tech. And I'm willing to look at pretty much any business model that has capital efficiency and major growth potential. I mean, those being the most basic qualifiers for something, I'm pretty much happy to evaluate anything. And I think that's part of our DNA as well. Is like we're one of the more open-minded groups. I think institutional funds, early stage Austin, that is in the market, because we'll do B2B, consumer, new kinds of business models. And at the end of the day, because of our concentrated approach, we just have to get to a place where we can be comfortable, understanding the business inside and out and seeing very clearly how we can add value. If we can't see a path to adding value, like, it's not a deal for us, right? We're not a passive investor. And if it's a moonshot, or maybe more of a science project, or something that, it's like the next 5 years are going to be R&D, and until we have a business model, those projects are less relevant for us. And so from that perspective, you could think of us as a little more meat and potatoes, right? We want to understand a business model. We want to validate, a business model before we make an investment, and get confidence, in advance.
Got it. Great to hear. And now, how involved are you with the companies you're investing in?
Yeah, I mean, we're pretty involved. So on average, each of the partners here may do like 2 deals a year, maybe 3 deals a year. And so that's a pace that allows us to dedicate a lot of our time to companies. We're a pretty partner-centric firm. And so, post-investment, that's where I spend most of my time, right? Of course, I hear new pitches, and I'm, doing events like these, but most of my time is actually spent with the existing portfolio. And I'm on the phone with my founders, or, phone or text or email, multiple times a week. And so, my wife is very understanding. But I'll get calls at 9 p.m., 10 p.m. at night, where founders are getting off their 12-hour workday, and
Right.
They're finally out of the weeds and just at home thinking about some things at a more of a long-term level, and they call me because they want a sounding board, and I provide that. So that's the relationship I aspire to have with the founders I work with. A close collaboration, not just someone who's there with the check and then disappears.
Right. Well, that's good to hear. I think that's something I feel like that may, to some degree, separate you. We've done these before, plenty of times, even before I was here and involved with early growth. So that's not something I've heard yet on doing one of these. It's just not to say the others don't do it, but it's good to hear that you kind of keep it a little more on the personal side. You're there for them after hours, essentially. So you definitely keep a tight knit relationship there with them.
Yeah, that's right. I think, that is one of our superpowers. We're a small firm, but we're concentrated. We don't have a platform team that I kick you off to. Once we make an investment, I don't kick you off to, junior analyst. What you get when you work with us is that partner for the next 10 years, right? or however long it takes.
Got it.
And I think there's value to the fact that Silverton's been around for as long as it has in these markets. And I intend to be here 10 years from now, working with all of the companies that I'm making fresh investments in today. And so there's a level of commitment that both sides make when they enter into that sort of relationship.
Great to hear. Well, what are some key differences that you see between a seed and a Series A company?
Well, on the one hand, I don't like to get too caught up into semantics, but in broad strokes, I think of the phases of a business being there's a customer discovery, market discovery phase. There's a phase of getting to product market fit, a phase of getting a go-to-market motion validated, and then scale up, right? So you don't want to overemphasize go-to-market and unit economics around, sales and marketing expenditures before you have, product market fit, or that, that there's folks willing to pay a certain amount for your product. And you're not overemphasizing, pricing and packaging before you've figured out who your, customers are and who else plays in that market and the possible positioning of that product. And so I generally think of seed as getting validation on product market fit, and Series A as getting validation on the go-to-market motion. And then B and beyond, putting fuel in the tank now that you've proven you have something people want, and you can sell the thing efficiently. Okay, now you can really spend money. But until then, in both seed and Series A, the general advice would be for companies to stay lean. You don't yet know until you've proven those two things. You don't yet know whether you have a business that is able to scale or not, right? And so a lot of the perks and the offsite budgets and the swag and all that stuff, for the most part, like, let's save that until we know we have a business, right?
Right.
So in the early days, it's like, okay, let's really focus on, okay, seed round. Let's make sure that we can prove without a doubt to the next set of investors or to customers, say there's real product market fit here. And in the Series A, let's really, refine the go-to-market motion, whatever that may look like, ahead of the next round. And along the way, revenue helps. So
Right. Definitely makes a difference. So in other words, let's not start popping champagne bottles just yet.
yeah, that's right. I mean, fundraising ought to be a tool. Fundraising isn't a business milestone. It's just you're capitalizing the business for the journey it's going to be on. And there's things you need to validate for yourself and to stakeholders that may be independent of your ability to raise money. And so you just need to be thoughtful about those things.
Oh, great to hear. Great to hear. Thanks for the long answer there. That was quite in depth, and I love it. No, that was good. I was worried it wasn't going to be long enough, to be honest. Like, I hope this is a good one. Let me ask you this, and you've really already answered this to a degree, to be honest. But are there other areas besides your tight-knit relationships that you have with the organizations, right? The founders you're working with. Are there other offers, or there are other things that you offer in terms of a unique disproportionate value?
Yeah, I think it's been interesting in the past, 5 years or so. It's become increasingly there's kind of a meme. It's like, okay, like, what do VCs do, right? And do they add any value, okay, what do you bring to the table? And I think the answer for that, I can answer in a few different ways. But number one, I would say, is a level of experience. So for us, because we're as involved as we are with, the amount of companies we have been over the past 18 years, there's a lot of real in-depth operating institutional knowledge there. And those are things we bring to the table because of how involved we are as partners, right? So not trying to overemphasize the point of, hey, we're hands-on, but it's informed perspectives, and it's data we can bring to the table. And then beyond that, it's a depth of relationships we can bring to the table, as far as various service providers across the spectrum. Some of the folks who are sponsoring this event here are part of that ecosystem that we bring to the table. But the other superpower, I would say, is talent. So there's a lot of talent flow that we can help steer into our companies. We've got a great track record spanning a long length of time. There are a lot of operators who are on the bench and ready to follow, our guidance or very interested in hearing our feedback on where they should go next. And we have that credibility because we've done right by a lot of founders, a lot of executives over time. And so we have disproportionate influence as a result in saying, hey, look, based on, your experience and what you've been able to achieve, like this is probably a great fit for the next part of your career. And we know everything there is to know about this business, having been engaged from day one and as involved as we are. And there's a level of trust involved there. So we can steer quite a bit of talent flow. I think we ran some statistics, I'm forgetting the exact numbers, but when you look across the entire portfolio, the number of VP level and above folks at these companies, like a disproportionate, percentage of them were folks that we referred in. And that's not by accident, right? That's dedicated time where a good amount of my time, when I talk about spending time with the portfolio, a good amount of it is recruiting, actively. I don't have a recruiter that I pass that off to, right? I'm convincing potential candidates to join our companies, and that's kind of a level of engagement we have too.
Great, good. That was perfect. What does the decision-making process look like at Silverton Partners? And this may be a bit of a long-winded question. And I guess with that, I'm really kind of speaking towards the diligence process. How long does your diligence process normally take? And what are the key steps in that process?
I would say it can vary anywhere from 2 weeks to, a month or more. And a lot of that depends on our familiarity with the space. A lot of that depends, quite honestly, on schedules, not just our schedules, but the founder schedules. You're coming into a process ill-prepared, and there's questions we have or data requests we may have that you're not prepared for. It may take some time for you to go and figure that out. That's never the best sign, but it happens. But in general, if there are no surprises, we can be fairly efficient with our process. The main thing to keep in mind is, we're a lead investor. And so we're not writing a check off one meeting, right? We're taking time to understand a business. And so our process isn't that different than most lead investor processes, right? It's probably a handful of meetings that we have with CEO and management team. We're doing a lot of homework on our end and maybe speaking with industry references and some back channel references on management team. And then, going back and forth on understanding kind of the business's financials and metrics and forming a thesis. And ultimately that culminates in us producing a memo internally and having the founders pitch the partnership. And at that point, it's usually a yes or no term sheet or, a reason for why it isn't a fit for us.
Got it. I love asking this question next. Well, I'd say next, but I always like asking this question in general. What are some pet peeves that you have when entrepreneurs pitch? So founders, get the ears out so you can listen to this, hopefully carefully with what Roger has to say.
Oh man, pet peeves about pitching. There's any number of things that would throw red flags when I hear a pitch. I think, something important to do would be to just, be intellectually honest about, the business. And what I mean by that would be, I think some less experienced founders may go into like Shark Tank mode where it's like, okay, I need like a super polished pitch and every answer has to be like with a positive spin. And if I screw that up, then, I'm off my narrative, and then like the whole thing comes apart. And really, like, I'm looking for potential long-term partner, right? And so I want to have an honest conversation with the founder. I want you to be honest about the gaps in the business, the things that you feel like maybe you haven't validated fully yet, even for yourself. Like, I think that there's a level of honesty, which is, okay, you get accustomed to pitching employees, to recruit them, you're pitching customers about how great your product is, you're pitching investors. And so you're just like constantly in pitch mode. And the relationship I want to start with is, okay, let's go into this like honesty mode, and let's talk about, I understand where all this stuff needs to be, in the long run for this to be successful. But, we need to talk about what we aren't 100% confident yet. We need to know the strengths and weaknesses of the thing. Nothing is perfect. And so I think just that level of honesty is probably the thing that everyone needs to think about.
Yeah, so it stands out, at least for you, that stands out the most, is just being upfront, open, and honest. Gotcha.
Yeah. And so, not being upfront manifests itself in many different ways. It could be like overly salesy, right? It could be just not able to take a conversation off script, and or just getting, so you get it.
I definitely do. Well, good. I think you just meant that towards me when you said going off script. So I hope I'm not leading you down the incorrect direction there. Roger, what's your opinion on, or well, I guess, what do successful founders do well?
Another big question there, Chris. I think they are very self-aware. I don't think I've met a founder who's really been able to. It's so hard to get through all of the phases of a hyper growth venture-backed business, and to make it to the end as a founder CEO is rare. And so there's a level of self-awareness that those individuals are going to have about themselves, about their strengths and weaknesses, about who they need to bring into the organization to fill in their gaps, to balance them out. So I think it's, the short answer is self-awareness.
We'll take it. We'll take it. How do you help your companies raise their next round?
Yeah. So if I've led a company's seed round, for instance, I see it as the most basic part of my job is to make sure the company is in a good spot as far as future capitalization needs, so long as the business is in a healthy state. And so I've got a Rolodex of hundreds of VC firms, and specifically decision-making partners at all of those firms. And so if I'm working with a company and they're on plan and it's time to go out and raise the next round, maybe it's a Series A, we'll go through that Rolodex together, and I will make warm intros to any and all necessary. And sometimes there's these days, with the market the way it is, the reality is you're speaking with as many investors as you can, because it's a tight. But generally speaking, we do want to refine the target list to make the most of the founder's time. The idea would be to run as efficient a process as possible. So go to folks who we know have an interest in this area, we know are a fit for the type of round we're trying to raise. And I'm usually doing a bunch of legwork in advance of kicking off a process. And it's not just the email intro, but it often involves me doing calls with folks to warm them up, or to make sure that this is something that is going to be really worth the entrepreneur's time, because I want them to I don't want them to waste time with this. This, of course, investor relations, fundraising, this is the responsibility of a CEO, but this is also an area where I can shoulder some of that burden, and I'll do that.
Perfect. Perfect. So I guess for today's call, and kind of getting towards the end, we will open it up for questions. So if you haven't already, feel free to list out your questions there in the Q&A window. I think that is, let me just verify. Yeah, it looks like we got some. So I guess one thing I wanted to ask you was, what would be the one message or lesson learned that you hope entrepreneurs can take with them from their experience and today's chat in general? Is there anything you can kind of pinpoint on, or a few things you can pinpoint on?
Like just like a takeaway for an entrepreneur.
Exactly.
I would say, if you're listening to this and you've listened to others like this, in some sense, like money is money. And in a market like this, no one can fault you for taking whatever money is available. But at the same time, when you choose to take VC money, there are a lot of strings tied to that, and it is a long-term commitment. And the joke is, it's harder to get out of a VC founder relationship than it is a marriage. You're pretty much stuck with them, right? We have 10 years of expected commitment when we make an investment, and we're seeing that partnership through. So it is very important to find philosophical alignment, personality alignment, and structural alignment with the fund. Just it would be for a period of time there, for a couple of years with the end of a bull market cycle. I think there was a trap, which was, there are some investors out there who are willing to pay much more than maybe would make sense for you to really even take from a valuation perspective, because that was how they would win deals, right? They don't have the reputation or the track record or the goods to compete in another dimension, and therefore they'll win on price. And it turns out, now in sitting here and at the end of 2022, that was a very big mistake for folks, and a hole they now have to dig themselves out of, where without getting into the weeds there, having a huge number that you have to grow into, where that last investor with all of their investor rights is sitting there thinking about, okay, well, I need at least some big multiple on where I came in, and therefore you're reducing your optionality a ton. You're bringing in a partner that may have less to contribute, and possibly a partner that doesn't have a ton of skin in the game.
Right.
So that'd be something to take away, is like choose your VC partner carefully.
Perfect. Great answer. And hopefully the founders took that one to heart as well on their end. It's not just about, hey, they got a check for me, but you want to build that relationship just as much as they are with you. Roger, we do have some questions here. And by the way, if you have questions to the audience, if you happen to have questions for Roger, great. If you have some for one of our other panelists, great. I'll try to go through them here over the next probably 5 to 10 minutes and see if we can get some of these potentially answered here. Let me run through. Let's start with this one here, actually. Roger, is there a minimum amount of equity you take in your invested companies?
There's a target that we'd like, but we don't have minimums. Again, we can be flexible to the situation, but the thing that matters to us at the end of the day is the fact that we're concentrated, and the fact that we're making these a smaller number of bets requires us to be at, I'd say, higher ownership targets than the typical fund that writes a small check into a lot of companies and participates in a lot of party rounds. So there isn't a special, line in the sand there, but we want to have more material relationships.
Okay. Okay. What about, how do you see the funding climate as we go into 2023 there?
Yeah, I wish I could predict the future, but I can't. So as a result, with the uncertainty in the market, we just tell all of our companies, expect the worst. And if you have cash, preserve that cash. And if you can add to the balance sheet, do so. It doesn't appear that there's going to be some, major return to 2020, 2021 levels. It appears, the expectation from LPs I've spoken to with other fund managers has been, hey, hopefully deal activity picks up a bit next year. There's like no discussion of really valuation increases at this point. I think we've settled to a level where there's still more room to drop if that's where it goes. And I think people have to there's a degree of acceptance and okay, now how do we operate in this new paradigm, this new environment that a lot of companies are going through now. Oh, you're muted, Chris.
Thank you for saying that. I just saw it pop up on my screen as well. What is a great win you've had recently? Any recent notable exits that it looks like some of the folks on the call are wanting to know about?
Yeah, sure. It's a great question. So I think you'll be hard pressed to find any great news from the past 6 months from anyone on the venture side. Having said that, we have had quite a bit of positive news from the past, let's say, couple of years. We had an IPO at the end of last year in Vacasa. We in the last couple of years sold a number of our assets into large private equity buyouts. So Alert Media was one of those. I'm probably forgetting some others. We have seen a number of companies really, find both product market fit and a scalable, repeatable growth motion, and they've gone on to raise significant growth rounds, and they're doing well. And so, yeah, the show goes on for us. I think we're in a blessed position in that even with the headwinds here in the market, like our portfolio is generally performing a lot stronger than peers. So happy with that.
Good to hear. It's a good one and this hasn't been asked before on the ones that I've done. So I like to see this, and this is very interactive. So thank you, audience. I'm going to try and get through them here with Roger. I know he's got a hard stop in about 10 minutes. So I want to make sure I'm completely.
And I'll try to answer these quick. Yeah.
Yeah. So
rapid fire.
There you go. Let's do it. Do VCs accept unsolicited pitches, or do you need a warm intro? What's your preference? I would assume warm intro, but I'll let you take it.
So I may regret this. My email's in my LinkedIn, so it's a little bit of work for you to find out what it is. So I allow anyone to email me, and I will read every email. I don't necessarily have the time to respond to every email, but if it's something that's relevant for us, I will respond. And I'm an inbox zero kind of guy, so I will read everything. And here's the reality is, with this type of engagement, this type of commitment we make, we want to get to know someone. And if it's a shorter window in getting to know someone, we're looking for reference points on that individual. And so whether it's upfront or whether there's other points of overlap, common relationships, at some point I need to get to know you better. And so time is a great asset there. And if we don't have time, then, referenceability helps. Muted.
And I keep hearing the pitter patter of my dog. I'm trying to keep that to a minimum. What advice would you give to a mid-career professional trying to pivot into VC? What is a good starting point potentially for them?
Yeah, well, into VC, not into a startup.
Into VC, correct.
That's a tough one. There's no cookie cutter path. I think it's VC is one of those things like everyone, it sounds like just like a fun job and it's very easy and like, okay, you like write checks and then, and then people pitch you. It's very easy to be a bad VC. The average VC firm, the average VC fund doesn't return any money back, right? Like, average VC fund performs well below the market. And so it's only the best VC firms that, last any length of time, and only the best VCs that return any real money. It's not really a get rich quick kind of, career path. And so if for whatever reason you think that despite all that, this is still what you'd want to do, depends what mid is. If you're young enough to go to business school and you can get into, top 3 or top 5 business school, then that may be worth a shot. But otherwise, I think, if I were to interview with someone, or someone's interviewing with me, the main thing is, okay, well, like, how do I know you can deliver value to me from day zero, right? And you need to somehow prove that you can do that. It's not just about your passion or your skill set. It's like, okay, so like, how are you gonna create value that I can't get from someone else?
Sure.
And is it, well, I'll just leave that as a little seed of a thought for now. I think it's too much to get into at this point.
Well, since you talked about quick rich, technically, and that's not the case going through the VC world, this is kind of a good question to lead into, I guess, to a degree. Are you investing in any blockchain as a service projects or solutions? Do you play in that realm at all?
We have invested in Web3.
Okay.
I think there's some interesting stuff there. But like, we're not hype. We're not buying into like hyped up projects. We're buying into business models. We're buying into real, and user demand, real use cases. And so if it's financial engineering, if it's a bet on consumer psychology, going, maybe going in an irrational direction or whatever, like, that stuff is less interesting for us. But the stuff that so far has been interesting has been in the infrastructure realm, and at least what Silverton would consider more interesting versus like a more consumer oriented thing, or like something in decentralized finance. We're not in the game to do back channel VC, SAFT deals, where we can do a quick kind of token flip in 6 months. Like there's a lot of funny stuff that happens in the crypto, investment space. And we just do what we know how to do best, which is just find, quality teams, founders, and work with them to build great companies.
No, that sounds great. And I'll try to get through a couple more here. Again, I want to give you a little time to jump to your next one. What are some sub areas, or I guess, what are sub areas in the digital health world that you prefer? Is there anything more specific or preference?
Yeah, so we're investors in quite a few digital health companies. The Helper Bees, which is in the elder care kind of services space. Wheel, which is an infrastructure play for telehealth. They've done quite well. RX Redefined, which is the disruptive tech-enabled solution provider for DME distribution for specialty physicians' offices. And the list goes on. Those are just some that are top of mind. So we're no strangers to health tech. We won't do life science like therapeutics, devices, but capital efficiency, scalability. If you check those boxes, we'll take a look.
Got it. And Nino, if you're still on the call, just to give you a heads up, he kind of has a long question here for both you, Roger, and Stephen. But I'm going to take that one offline. I'll send it over to you guys by email here. Let you kind of touch base around that, and we'll get back with you there, Nino, just as an FYI.
Yeah, that's probably a good idea.
Just because it's a long one. I don't. What about in this? Again, I know Texas, obviously you're in, but geographical preference and geography, are you willing to explore? Do you work with organizations, founders outside of the state of Texas?
Yeah, so we're about 1/3 outside of Texas, and that's really more a function of our backyard is Texas, and so we're just going to have a bias there regardless. And we know a lot of people here, and a lot of people know us. I am at the moment splitting my time between New York, LA, and Austin. So I have a few companies I work with in LA and New York, and then the rest in Austin. And then for the fund as a whole, most of what we do is in Austin, and we have some Dallas and Houston. We have some deals in the Rockies, Midwest, Florida, New Jersey. But most people think of us as, Texas VC, and we're fine with that. If we can do the best deals there are to do in Texas, we'll be very happy.
Perfect. Well, I will, I've got one more here, quick one, and then I promise I'll let you go, Roger. I know I've kept you long enough. Nino, I'm going to go ahead and ask this one. He's asking, are you investing in seed rounds in automotive transportation sector, in a particular EV charging in general? Is that something you'll look at?
So automotive transportation, sure. We've done a bunch of stuff in logistics. We've done a bunch of stuff in software for the auto service industry. We've done Zebra, which is in car insurance marketplace. So yeah, we've done a bunch of stuff in and around the space. Rolic, which is MarTech for power sports and RVs and boats. EV charging, depends what the business model is. If it's CapEx intensive, probably not.
Okay, perfect. Well, I felt like I was rushing you towards the end there, but I know you've got somewhere to jump. Roger, feel free to jump now if you'd like. Thank you again. Really appreciate it. Again, I owe you lunch, so we'll do that soon. I'll come bug you downtown a little bit and take you somewhere. But again, thank you for being on. I want to tell everybody on the call as well, the audience, for our partners, again, reach out to them, connect with them on LinkedIn. They can be an incredible resource for you. I can't state that enough. You never know. Most of you probably already know it, but I usually beat it to a dead horse on these calls. But make sure you're reaching out to them. If you have questions that are coming up, feel free to reach out to me, connect with me on LinkedIn as well. I know there were some questions that I didn't get to. Don't hesitate at all to, if you have for somebody specific, one of our partners, feel free to send it over to them. Feel free to send it over to me. I'll get them in touch, or I'll get in touch with them and have them be able to get that answered for you. But again, we really appreciate everybody being on. We had a very live audience. That was good. This is the best one I've had. Would love to see that pick up and be even larger as we continue to do these. And outside of that, thank you again, partners, for being able to jump on with us today. And Khushbu, I'm going to let you run with it from here.
Thank you so much, Chris. It was quite an informative webinar, I must say. Thank you so much to our partners and VC Roger, of course. To our audiences, we have our next Meet the VC on December 14, 2022, with Neil Mehta, G2 Venture Partners at same time, 12 p.m. PST. Looking forward to see you all there as well. You can find us all over the interwebs. Just a reminder, the webinar will be available within 48 hours on our YouTube channel. We appreciate that you have joined us today in this webinar. And with that note, we conclude today's webinar. Thank you so much. Okay, bye-bye.
Bye-bye.